In the stock market, most people lose money not because they enter late, but because they don't know when to exit. They ride trends blindly, ignore warning signs, and by the time they react, the profit is gone, or worse, turned into loss. But what if you could spot the exact moment when buyers are losing control? What if you could identify market tops before a fall begins? There is one powerful candlestick pattern that reveals this shift clearly. That pattern is called the Gravestone Doji. If you understand this pattern deeply, you can protect your profits, avoid traps, and even take high-probability short trades. What is a Gravestone Doji? A Gravestone Doji is a special type of doji candle. It forms when the open, low, and close prices are almost equal, but there is a long upper shadow. It looks like an inverted T. Long upper wick, no lower shadow, small or no body. But this is not just a candle. It is a complete story of market psychology. Here's what happens during its formation. Price opens, buyers push it strongly upward. Suddenly, sellers step in, price falls back to the opening level. So what does that mean? It means buyers failed to hold higher prices, and that failure often leads to a reversal. Psychology behind Gravestone Doji. Let's go deeper into what this candle really tells you. In an uptrend, buyers are in full control. Prices are rising, confidence is high, and retail traders are entering aggressively. But then a Gravestone Doji appears. What happened that day? Buyers pushed price higher, smart money started selling pressure increased, price collapsed back down. This is the moment when smart money exits, late buyers get trapped, and this is why the pattern is called Gravestone, because it often marks the end of a bullish move. Here's where most traders go wrong. They see the pattern, but ignore the context. Gravestone Doji works best at strong resistance levels, after a long uptrend near supply zones at previous swing highs. If you see it in the middle of nowhere, it has no meaning. But if it appears after a strong rally, that's where professionals pay attention. Let's talk about the mistakes that destroy profits. Selling immediately after spotting the candle, ignoring overall trend, trading without confirmation, using it in sideways markets. Remember this clearly. Gravestone Doji is not a sell signal, it is a warning signal. You must wait for confirmation. Now let's build a practical strategy you can actually use. Step 1. Identify uptrend. First condition, market must be in a clear uptrend, because this pattern signals top formation. Step 2. Spot Gravestone at resistance. Look for it near resistance zones, trendline resistance previous highs. Step 3. Wait for confirmation candle. This is the most important step. Next candle should be bearish. It should close below Doji low. Without confirmation, do not trade. Step 4. Entry, stop loss, and target. Entry, below confirmation candle. Stop loss, above Gravestone high. Target, next support level, or minimum 1-2 risk reward. This ensures you take high probability trades with controlled risk. And Gray's strategy works, because this pattern reflects distribution by smart money. When institutions want to exit, they don't sell suddenly. They sell when retail is buying, and Gravestone Doji forms exactly at that moment. So instead of being trapped, you position yourself ahead of the fall. To take your trading to the next level, combine with volume spikes. Use RSI overbought confirmation. Focus on higher time frames. Avoid illiquid stocks. And always remember, risk management is everything, because even the strongest pattern can fail. So the Gravestone Doji is not just a candle, it is a signal of rejection, weakness, and potential reversal. If you learn to read it correctly, you can protect your profits and even profit from falling markets. And in trading, knowing when to exit is more powerful than knowing when to enter. If you found this strategy valuable, like the video and subscribe for more deep trading insights. Have you ever spotted a Gravestone Doji in real trading? I'll see you in the next video.